Hi, everyone. Welcome to this week's market update. I'm here with Eric Anderson. Eric, let's start with tech. It's been brutal out there. What happened?
It's a classic sentiment flip, and Broadcom is the perfect case study. This is a stock that was flying high just 3 months ago. AI hype, trillion-dollar market cap, analysts falling over themselves to raise price targets. Fast forward to now, 4 straight days of losses, down nearly 20% this month and over 30% from its peak. What's changed? Reality. People are starting to question whether the AI spending boom can really keep going at this pace, especially with tariffs threatening to choke supply chains and economic momentum starting to crack. The mood's shifted from FOMO to maybe we got ahead of ourselves. And with a forward PE of 25x, investors are now split. Either this is a golden buying opportunity, or the market's reassessing what these companies are really worth in a slower growth world.
Speaking of sentiment shifts, gold's been on a quiet rampage. What's driving that?
Absolutely. Gold's been the stealth winner of 2025. While everyone was glued to the Nasdaq, gold quietly broke to all-time highs. Why? It's simple. Fear and inflation. Susan Collins at the Fed nailed it this week. Tariffs could make inflation stickier and higher than the market expects. Add in political noise from Washington, slowing growth, and a softening dollar, and you've got the perfect storm for gold. But here's the kicker. This rally isn't driven by memes or momentum traders. It's central banks, it's institutional flows, it's emerging markets quietly buying more physical gold. This isn't just a hedge, it's a message.
And of course, we can't ignore the elephant in the room. Tariffs. What's the latest on that front?
It just keeps coming. This week, Trump dropped a 25% tariff on imported cars and car parts, set to hit next week. That's massive. Half of all U.S. car sales are imports, and according to the U.S. International Trade Commission, this could slash import volumes by 75% and push car prices up 5%. Markets felt it. The S&P 500 broke its rising trend. Japanese car makers dipped. Even semiconductors got caught in the crossfire, with Nvidia sliding after China hinted it could ban one of its key chips. And the bond market? It's unsettled. Futures still price in 2 Fed cuts by year-end, but 4 FOMC members now think we get 0. Investors are starting to hedge for higher for longer rates, even as growth indicators weaken.
On that note, how's the economic data looking? Are we seeing early signs of stress?
Yes, and it's subtle, but it's there. The Conference Board's Consumer Confidence Survey showed expectations dropping close to 2022 crisis levels. That's not nothing. Add to that rising copper prices hitting all-time highs, which feeds the inflation narrative and raises questions about industrial input costs in an already stretched system. Meanwhile, housing data in the U.S. looks fragile. Starts are down. Sales are at levels we haven't seen since 2009. And yet, the services side of the economy is still ticking along. So, the picture is murky. Some resilience, but plenty of warning lights flashing red.
Let's change gears. Any bright spots globally? What about India?
India's the quiet outperformer once again. While China's special action plan to support households underwhelmed, India delivered its strongest weekly equity performance in 4 years, up 4.2%. Foreign institutions are back, inflation surprised to the downside, and production data beat expectations. Add in election year optimism and strong buying in infrastructure and financials, and you've got a market that's quietly stealing the spotlight.
Before we wrap, what's your key message for investors heading into April?
Brace yourself. April 2nd is coming, and that's the big policy pivot point. The scope of these tariffs will set the tone for Q2. The world is watching, and while there's hope for a more measured approach, the risk of escalation remains. For now, investors should stay diversified. Gold's doing its job. India's looking compelling. But keep an eye on bonds, tech valuations, and geopolitical headlines, because this story is far from over.
That's it for this week. Stay tuned for more insights next time.